more Q3 2022 bank earnings reports are coming in, with the latest from Zenith Bank posting a gross earnings growth of 20% at 620.6 billion naira. Juliana Ogunkoya, investment research analyst at Meristem, joins me to discuss these reports can loosen the bear's grip on the equities market and other updates. Juliana, thank you so much for joining us today.
Yeah, good afternoon. Thanks for having me.
Well, investors are having to digest more earnings, latest from Zenith, Nigerian breweries, and just before these two, GTCO. But let's quickly talk about Zenith Bank's earnings. We saw gross earnings up 20% year on year, high interest rates boosting interest income, which grew 27% year on year. But interesting to see the interest expense climbing just under 50%. What are your takeaways from the numbers you've seen?
All right, so broadly, Zenith's performance was positive, looking at the gross earnings and also the profit after tax. And interest income also increased, and non-interest income. We can attribute this to the increase in yield, right, in the fixed income environment, which is very, and also the increase in MPC rate, which is very positive for the bank. However, for the interest expense, you can attribute the increase, right, to increased tax expense to the banks. I mean, the bank has been enjoying like tax cuts from the government. However, starting from this year, they've been paying back the tax that was they were suspended for paying for the past 7 years. But for the broad outlook for Zenith Bank, it looks positive. They are looking into growing organically and also concentrating on retail banking, growing their loan books, their asset base, and also their gross earning and profit after tax.
How would you describe overall investors' reactions so far, response to the numbers that we've seen so far, the Q3 numbers?
All right, so investors' reaction has been largely muted. However, for the banking stocks, we've been seeing mixed reaction from investors. This week, there was like buying interest in banks like Zenith Bank. However, for GTCO, we've seen like significant selling interest on the stock. However, for other stocks like the consumer goods, the performance, Q3 performance basically for the consumer good was not very strong, but overall 9M performance was quite positive. But investor reaction has been largely muted, and this similar trajectory played out also in H1 results.
Now, for earnings outlook for banks for 2022, I believe you did have a forecast at the beginning of the year. Is it, lining up with the forecast that you had at the beginning of the year?
Yes. So we expect the banking tickers to maintain the positive trajectory, considering the continuous increase in the monetary policy rates. And also, we're expecting further increase, right, in monetary policy rate by the end of this year. And this means also this will transcend into positive performance for the banking tickers. So overall, for the banking stock, we expect positive gross earnings growth by the end of the year.
All right, let's talk about the market overall now. Where have we seen the most, or where have you seen the most bargain hunting since the beginning of the week?
So the most bargain hunting has been on stocks like Boa Cement. Boa Cement has gained significantly this week, and it's gained on Tuesday, Wednesday, and also MTN, WAPCO, FitSense, some of the stickers were the major driver of activities on Monday, Tuesday, and Wednesday. However, yesterday the market closed in the negative region due to selling interest, GTCO and Airtel and also AICO. And today we're also seeing the markets closing negative based on intraday performance. We saw selling interest, especially on MTN.
How are investors balancing or weighing their position? That's equity investors now weighing their positions at the stock market, and and then looking onto the other side at the yields at the fixed income market, especially on the short dated bonds. What are they thinking to themselves? Those yields versus where we are at the market.
Yeah, so basically investors are taking the wait and see approach, considering the prevailing uncertainty surrounding the broader macroeconomic environment. And so for investors that are looking into buying into long-term stocks, they're already taking position in the financial services ticker. However, for investors that want to invest in like short-term investments, we're seeing them significantly taking position at the fixed income market, where rates have been maintaining the upward trend.
So are those banking counters serving as safe haven stocks for investors?
I mean, for now, investors are I mean, it's liquid, and also majority of those banking stock have very good fundamentals. So yeah, you can say it's like a safe haven for investors. And we can see for the consumer goods, like I mentioned earlier, where performance has been broadly underwhelming. We're seeing investors significantly selling taking off their position on these stickers and moving into the banking stocks. And also for those that want short-term investment, like I mentioned, taking position at the fixed income market.
And for those consumer goods companies themselves, having to deal with rising inflation and a shrinking consumer wallet, we've talked, I mean, one big theme this year has been innovation, how these companies have had to navigate and think outside of the box to keep consumers patronizing their products. How would you describe how they've been able to do that so far this year?
So yes, majority of the consumer good companies have taken the approach of increasing the prices of their products. I mean, they have to find a way to cushion the effect of the rising inflation. However, there are limits to how much they can push this rising cost to consumers. That's why we can see significant increase in their production costs, which significantly affected their Q3 earnings potential. So some of these consumer good companies like the flour millers are trying to invest significantly in backward integration, but still they invest over 90% of their raw material, which means they're still open to the global uncertainty and also global uncertainty, and also the effect of rising inflation in the global markets. And also we also have the aspect of the illiquidity of foreign exchange that's also affecting these companies. So they are, I mean, the cost pressure, the impact on their earnings is not likely to end anytime soon. So the broad outlook for these consumer good companies is very uncertain.